So this is a sum of acquisition and it is May June 2023 paper 32. Arich, can you please read the sum for me?
Yes, Miss. Alice and Bob have been in partnership for many years, engaging in the trading of wood. They shared profits and losses in the ratio of 3:2. The total contributed capital was 250,000. Each partner contributed capital on the basis of profit sharing ratio. On January 1st, 2023, they agreed to sell the business to X Limited, also a trader of wood, for 420,000.
What is 420,000?
Purchase consideration.
Okay, 420,000 is the purchase consideration. Okay. Go ahead.
X Limited took over all the assets except cash at bank and a vehicle. The assets taken over revalued as follows. Further information.
What does carrying value mean?
The agreed value.
No. What does carrying value mean?
Net book value.
The net book value. And what does revalued amount mean?
The agreed value.
The agreed value, the value at which the takeover will happen. Okay?
Okay.
Okay, fine.
Further information is also available. Alice took over the second vehicle carrying value 25,000 at the value of 23,800.
Okay. Now, before reading all of this, we will see what are we asked to prepare and then accordingly we will do selective reading. Okay? First question is, state 2 reasons why a business may acquire another business. Come on, give me 2 reasons why a business may acquire another business.
Growth. Growth and eliminate competitors.
It could be growth. Instead of growth, you can write increase in market share. What else?
Elimination of competitors.
Elimination of competitors. So you can acquire a business if you feel that business is your competitor. If you acquire that business, it will join hands and you will remove that business from competition. Are you with me?
Yes, ma'am.
Yes, miss.
Now you have to prepare realization account. Okay? Come on. What is not taken over? Can you tell me?
Cash at bank and a vehicle.
Cash and bank is not taken over, and what else?
A vehicle is not taken over.
One vehicle, except cash at bank and a vehicle. That means one vehicle is not taken over and other vehicle, there is some information. What am I supposed to prepare? What am I supposed to prepare? Realization. Okay. So I have to prepare realization account. How will I prepare realization account?
Increase in assets would be.
That is not revaluation account, it is realization account.
Oh, wait. Assets would be debited.
All assets will be debited.
Liabilities credited.
Liability is credited. Okay, fine. So when I am reading the question, over here, I'm seeing only the assets. Right? I can see only assets, right?
Yes, miss.
All the assets will be there in my statement of financial position. I will put it on the debit side of realization account. Now tell me, it should be the book value or the agreed value?
Book value.
At the book value. Very good. So all the assets that is taken over. Now, since it is for 4 marks, I will just write all assets taken over. Normally, you write all the assets, but here you are only given the taken over assets value. So I'm writing only the taken over assets value, and I'm writing 290,000. If it is for more marks, then you will sit and write each and every, you will name each and everything. Are you with me?
Yes, miss.
Yes, miss.
Okay, fine. Now come on. Assets
Miss,
are,
aren't you supposed to take the revalued amount?
sorry,
Aren't you supposed to take the revalued amount?
the revalued amount, no, darling. Revalued amount is helping you to give you the purchase consideration. So this is the value of your assets. The assets at book value will come over here, liabilities at book value will come over here, and purchase consideration will come over here. Okay?
Okay.
Okay, fine. Come on. Read 1 minute, Veda. Read the next part. Read the adjustment.
The trade payables of 44,000 were settled after taking a cash discount of 5% and were paid out of the partnership's bank account.
Okay, fine. Now we have something related to the trade payables. Now sorry, Alice took over second vehicle. Assets here, liabilities here. Assets will be sold over here, purchase consideration. Assets will be sold over here through purchase consideration. If something is not sold, if something is not sold and it is taken over, where will you write? If something is sold, it's over here. And if it is not sold and taken over by the partners, you will still write over here. So what is being taken over by the partner?
Vehicle.
A vehicle has been taken over by the partner at what value?
Book value.
2,800. So if you know dissolution, you would know this entry. If you don't know dissolution, then we will do this realization account concept in dissolution. So what has been taken over? 23,800. I will write Alice capital account. It is like Alice's drawings. Vehicle taken over. Are you with me?
Yes, miss.
Yes, miss.
Let's go ahead. Trade payables were settled after taking cash discount of 5%, and it was paid from the partnership bank account. Tell me, will this have any effect on the realization account? How much you are supposed to pay the trade payables? How much were we supposed to pay the trade payables?
41,800
Okay, 40.
after
Okay, but how much have we actually paid them?
41,800.
So you've paid them 41,800. What is the amount of discount that we are going to get?
2,200.
2,200. Can you tell me what is basically a realization account? A realization account is an account that tells us that when you're selling your assets and you're paying off your liabilities and you're closing off your business, are you receiving any profit or are you receiving any loss? Okay. So now, when you're closing off your business, you're paying off your trade payables some amount. You're paying off your trade payables some amount and you're receiving a discount of 2,200. Are you with me?
Mm-hmm.
Yes.
So is it a benefit to the partners?
Yes.
Yeah. So, and who's going to pay this off? Who will pay this off?
The trade payables.
Okay.
The
The trade
limited company.
payables will be paid off by us. Now understand one thing very clearly. I told you all assets you will write over here and all liabilities you will write over here. Are you all with me?
Mm-hmm.
Yes.
Okay. So that means they've given me information about a liability and the name of that liability is what? Trade payables. With me?
Yes.
Okay, fine. If the trade payables are here and you're going to pay them off, so where will you pay them off?
It will be recorded in the debit side.
The opposite side. If the assets are here and they are going to be sold, so they will be sold on the opposite side. It can be either sold or it can be taken over by partners. So if you have your trade payables here, you're going to pay them off over here. So how much are you paying them?
41,800.
So you're paying them how much? 41,800. Are you with me? So
Mm-hmm.
I have recorded my trade payables and I have paid my trade payables. With me?
Yes, miss.
Someone
Yes.
read ahead. Cash at bank amounted to 27,000. Now what do I have to write on the credit side? What else do I have to write on credit side? Purchase consideration? Yes?
Mm-hmm.
Come on, what is the purchase consideration?
420,000.
You will write total purchase consideration or you will write the amount? You can write anything. If it is for more than 4 marks, then you will write the entire breakup of your purchase consideration. If it is less than like 6 or 7 marks, then you can just write the total amount of 420,000. So what is this? Consideration. Who is going to pay the consideration?
The limited company.
X Limited Company is going to pay the consideration. Before closing this account, I am making you all revise the revaluation or realization account again. Those who know dissolution would know the format of realization account. Can you please tell me all assets on which side?
Debit side.
Debit.
At book value. All liabilities on which side?
Credit.
Credit side at book value. Purchase consideration where?
On the credit side.
Purchase consideration on the credit side. Okay. Purchase consideration will be for what? Assets and liabilities taken over, right?
Mm-hmm.
If something is not taken over and sold separately, then what will you write? The asset is here. It can be sold on this side or it can be taken over by the partners. Yeah. So over here, Alice is taking over the vehicle. Can you see this?
Yes.
If some liability is not taken over by the firm, then it can be paid by us or it can be paid by the partner. So if it is paid by us, you will do cash bank debit. Sorry, realization debit, cash bank credit. And if it is paid by partner, you will do partner's capital account credit. Are you with me?
Yes.
And then you will
Yes.
do profit on realization and loss or realization on whichever sides. Are you all with me?
Yes.
Yes.
I have written the assets that are taken over, and for this I am receiving some purchase consideration. Yes? For the assets that are taken over, I am receiving some purchase consideration. Yes or no?
Yeah.
Yes.
This liability I have recorded over here, but it is not taken over, it is paid. So I have paid over here. Yes or no?
Yes.
And there is one asset which the partner is taking over as drawings. So this asset should appear here. Is this asset appearing here?
Yes.
Where?
No.
Reach. If the asset is here, you can sell it here.
Yes,
Right?
miss.
If you're not selling it, then the partner is taking, but the asset should appear on this side. Correct?
Okay.
So tell me the asset which is taken over by Alice, is it appearing on the debit side?
It should appear on the debit side.
It should appear on the debit side, but it is not appearing. So can you tell me now? I will have to write this asset also on this side, right? So what is
Yes.
the value of the asset that Alice is taking over?
23,800.
No, she is taking at 23,800. But what is the actual carrying value? Because here
25.
be at the book value or the carrying value only. 25,000. Are you with me?
Yes.
So all assets on the debit at carrying value, all liabilities on the credit at carrying value. It can either be taken over. If it is taken over, then it is purchase consideration. If it is sold, then it will be cash bank. And if the partner is taking, then partner's capital. Similarly for liabilities, and you will close your realization account. Close your realization account and find the profit or loss on realization. $44,000 plus 23,800 plus 450,000. This is the reason why I wanted to do the textbook question. 487,800 minus 290,000 minus 25,000 minus 41,800.
Miss, in the previous question we did in the textbook question, we took the revalued amount, right? Or the agreed amount, right?
We didn't make a realization account. I told you
Oh,
when
okay.
the acquisition is with a sole trader, it is just like a merger. But only when the acquisition is with a partnership, you have to close the partnership form. And when you are closing the partnership form, the assets and liabilities are belonging to two people. So you'll have to either take over the asset or sell the assets, take over the liabilities or pay the liabilities and get the profit or loss on realization. It is similar to dissolution. But you all have not done dissolution yet, if I am not mistaken. Have you done dissolution?
Yeah, we have done.
You all have done dissolution. So you all know the format of realization account, right? So you have profit on realization for Alice and for Bob. How much will go to Alice? It will go 3/5 and Bob will go 2/5.
Miss, the value on the marking scheme is different.
Yeah, because they keep on changing the marking scheme. We will follow the format of realization account. We are given a fixed format by our Cambridge. All assets debit, all liabilities credit.
So this is
Yeah, you will get the same answer. Just check the same answer. You're getting the same answer.
No.
Yeah,
Oh, okay, that. Yeah.
The profit will be the same. I think the balance will.
realization. What is the marking scheme doing?
Surya
Just
Kumar,
that.
yeah.
It's just that they are showing the net effect of discount over here. And what we do, we write the liabilities here and pay off over here.
They always give the alternative representation.
Yeah, that's okay. I stick to this format for realization account, for dissolution also, and for acquisition also. So I always follow this. You have one format, follow it and be confident. Is the realization done?
Yes, miss.
Partners capital account. Okay. When you're making partners capital account, you should always have your realization account in front of you while making the partners capital account. So what will I do is I will just crop the realization account for myself and get it done. Are you with me? Are you with me?
Yes, miss.
Okay, 1 minute. Just give me 1 minute, one break, short break.
Okay.
When you prepare a partner's capital account, you need to have your realization account right in front of you. Are you with me?
Yes, miss.
Okay, fine. Come on, how will you how will you make the partner's capital account? Let's read the first information that was given to us. What is this? Total capital that is contributed is how much?
250.
And each partner has contributed on the basis of their profit sharing ratio. Tell me, where will I write? They wanted
Credit side.
1st January 2023. So this is their opening capital that they have given me.
So opening balance for Alice is 150. Bob 100.
Bob is 100,000. Okay, fine. Over here, I see that Alice capital, it's realization credit. So I will write Alice capital debit because Alice has taken over a vehicle, so it is like her drawings. Yeah.
Okay.
So Alice has taken over vehicles. It is like her drawings, and it is how much? 23,800. Yes.
Yes.
Okay. Now there is discharge of 420,000 of purchase consideration. If it is credit over here, that means it will be on the debit side over here. Yes.
Yes, miss.
But how now? I do not know how do I distribute the purchase consideration between Alice and Bob. So I'm just keeping it on hold. I have to read the question for this. Yes. Profit on realization belongs to whom?
The partners.
Realization belongs to whom?
The partners.
The partners. Okay, so it is debit over here, so it will be credit where?
In the capital account.
So I will write it on the capital account, profit on realization. Alice is getting 78,600 and Bob is getting 52,400. Now from the realization account, the only thing that is left for me is the discharge of purchase consideration. Yes. 420,000. Are you with me?
Yes, miss.
Okay, fine. For discharge of purchase consideration, I will have to see who is getting what. Come on, let's go to the purchase consideration. Read. Purchase consideration was settled by. How was it settled? 200,000 ordinary shares of $1 each at 1.60. Yes?
Yes, Miss.
And the balance was given in cash. So how much was the ordinary share capital? 200,000 into 1.60. So it was 320,000. We will split the capital later, the capital and share premium later when I have to make the statement of financial position. Are you with me?
Yes,
Yeah.
miss.
Okay. So 320,000 was towards the ordinary shares, which X Limited has given in purchase consideration. And the balance was in cash. What is the balance of cash? 320,000 minus 420,000. The balance was discharged by cash, that is 100,000. Ordinary shares were issued to Alice and Bob equally. So this was given to Alice and Bob equally. So 160,000 was given to Alice and 160,000 was given to Bob. Are you with me? So in our realization account, this 420,000 purchase consideration that is on the credit over here will come on the debit over here. Yes? X Limited. X Limited is giving the purchase consideration of ordinary shares. How? 160,000 to Alice and 160,000 to Bob. Are you with me?
Yeah.
I have no split up on the balance which is discharged by cash. So they will have to give me some information about the balance that is discharged by cash. Read adjustment 4. Alice and Bob have a credit balance on their current account on 31st December 2022. The balance of Alice account was twice of that of Bob. That means they have a current account balance and I don't know what is the current account balance. Whatever was the balance of Alice account is twice of that of Bob. So if Bob had 1, so Alice would have 2. Yes?
Yes, miss.
If Bob had 1, so Alice would have 2. Their current account were transferred to their capital account. So whatever was the balance of current account is now going to be transferred to their capital account. So we have something to think about what would be there in their current account. Think. Come on, let's see. Okay. What is the value of the assets that is taken over by X? What is the value of assets that is taken over by X? 290,000. Can I say this is the Can I say this is the capital of Alice and Bob?
How is that the capital?
See, whatever they had Whatever they had in their balance sheet is ultimately being brought by them.
Okay.
Okay, so whatever was there in the balance sheet or the statement of financial position of Alice and Bob is ultimately being brought by them. So this is the capital of Alice and Bob. Can I say that? Yeah.
Okay.
Okay. But this does not include one vehicle which has been taken over by Alice. I am trying to find the actual capital of Alice and Bob. So this does not include one vehicle that has been taken over by Alice. What is the carrying value of that vehicle? 25,000. So basically they had the total assets that they have is over here 290,000 that is taken over and the vehicle that is taken over. Yes. I am trying to find capital account balance of Alice and Bob. So basically all the assets that they have is 290 plus 25. Are you with me?
Yes.
Are you with me? Then they also have liability of how much?
44.
So all assets minus all liabilities would give me their capital. So they have a liability which is trade payables, which is 44,000. Yes.
Yes.
And they also have a cash and bank balance of 27,000. What gives me my capital? All assets minus all liabilities is capital. Are you with me?
Yes, miss.
All assets minus all liabilities gives me my capital. And in this, your capital is equal to your NATO. Right? So this is my capital account balance. Or I could say this is my net assets at book value. Are you with me?
Yes.
Hello.
Yes. Yeah, miss.
Yeah.
So my capital account balance is 298,000. Why I am doing this? Because they are telling me that Alice and Bob also has a current account and the current account has to be transferred to their capital account. And I do not know what is their capital account. I do not know anything about their current account. So I will try and find out what is the actual capital and what is the capital that it is over here. So the balance of capital would be in the current account. Are you with me?
Yes, miss.
Okay. So their actual capital balance is 298,000. But I have started this my capital account where they say that it would be 250,000. Okay, their capital account balance actual is 298,000 and capital account balance shown is how much? 250,000. So the balance of their capital should be in the current account. Take time to digest. Ask me doubts if you have any. I'm waiting for doubts. If you want, I will pause it.
Miss, this 298 is opening balance?
Sorry, 1 minute, beta. Which 298?
The one we just calculated right now.
See, basically what is happening over here, understand, okay? What is happening over here that this is following a fixed capital method. That means whatever capital that they have is divided between the capital account and current account. Are you with me?
Yes.
Since they are having a fixed capital method, that means whatever is their capital of the business is divided into capital account and current account. With me? And they told me that in the capital account, we are having only 250,000. Are you with me?
Yeah.
Okay. So they are telling me in the capital account, they have only 250,000. That means the balance of the capital should be in the current account. This is the first thing.
Okay, so the difference would be the current, right?
The difference would be the current account.
Okay.
Okay. First, this thing you need to understand. So now, because I know that I do not have the current account balance, but I know what is the fixed capital 250,000, my entire calculation goes towards working out what would have been their actual capital from which fixed is 250. So the actual capital is basically the net assets, and the net assets, how do you get? All assets minus all liabilities. That is there in the statement of financial position. Are you with me?
Yes, miss.
Okay. So this is all the assets that was taken over, and this is the asset that was not taken over. So this is giving me all the assets. So this is giving me all their assets. And this is all the liabilities which I gathered by compiling information from here. And there was one cash and bank account also, which is 27,000. So all the assets minus all the liabilities, I got the actual capital that should have been. But their fixed capital is how much? 250. That means in the current account, they are having how much? 48,000. If you are with me, tell me a yes. If not, I will still pause the meeting and will re-explain.
Yes, miss. Understood.
Sidra,
Yeah, miss. Got it.
here,
Kind of.
kind of. Farha,
Yeah, miss, I understood.
Yeah, miss.
so the remaining capital is lying in the current account. Now they've given me the breakup of current account. What is the breakup of current account? 48,000 is the breakup of your current. 48,000 is lying in the current account. What is the breakup of current account? Can you tell me?
Alice gets 2/3.
Alice was twice of Bob. So Alice was 2/3. So Bob is 1/3. So the amount that will go to Alice would be 2/3 of 48,000, and amount that would go to Bob is 1/3 of 48,000. Yes?
Yes.
So this is the current account balances, and the current account balances is transferred where?
Capital account.
So the current account balance is transferred to the capital account. So I will transfer the current account balance. So I'm transferring the current account balance, and this would be my working note number, whatever you want to give it, or whatever is your working note. So how much is the current account balance? 32,000 and 16,000. Yes?
Yes, miss.
Now, since it is acquisition, the partner's capital account will not have any balance. It will be settled through taking or giving of cash. Correct? It will be settled through the giving or taking of cash. So close the account. First close the account of Alice. Which side is more?
Credit.
Credit side is more. How much is the credit side total?
Two 600.
So 260,600 minus deduct 23,800 and 160,000.
$76,800.
This is balancing figure, okay? Similarly, do for Bob. It is 168,400 minus 160,000,
8,400.
8,400. So this will be settled. Okay. Can you tell me what was the most difficult part in this question? Finding out the current account balance. Okay. Can someone summarize for me how do we find the current account balance? Sidra. Sidra, is she there?
Yes.
Can you summarize to me how
Yeah.
to current account balance?
Okay, so first you have to, so you take the net book value of all the assets, and you subtract that with the liabilities, which is the trade payables, um, which will give you your capital account balance. So, and you have the total capital account, total balance given to you, which is 250,000. So you'll subtract that to get the balance, to get the figure, the difference basically, which is the current account total balance. And then you divide that amongst the partners in the ratio 1:2. Yeah,
2:1.
2:1. Yeah.
Okay, fine. Pass the journal entries to record the acquisition of the partnership.
Is it the live? Okay, that. Yeah.
All assets taken over. At the taken over value, okay?
Goodwill debit.
Goodwill debit. All liabilities taken over. Have we taken over any liabilities or no? All liabilities taken over credit and purchase consideration credit.
Miss, the goodwill won't be recorded in the capital account.
Which account?
The capital account.
Are you raising goodwill? Are you writing off goodwill? You are sending the partners away. You are throwing them off. Okay?
Okay.
And you are giving them
Okay.
purchase consideration. So you're recording the full purchase consideration for them.
No, miss.
Purchase consideration includes goodwill. With me?
Okay, miss.
Okay. Someone write the journal entry for goodwill. If you're facing doubts, please tell me. Discuss and I'll all assets debit at the taken over value. Goodwill is a difference between your purchase consideration and this 352,000. Purchase consideration is 420,000. 352,000 is the assets NATO, net assets taken over. 68,000 is your goodwill. You've not taken over any liabilities and you're crediting purchase consideration. With me?
Yes, miss.
With the cash she has received, Alice is considering to set up a new business trading in wood on her own. Okay, Alice was a partner. Advise Alice whether or not she should set up this new business. What a dumb question is this?
Miss, in the previous one, when we calculated goodwill, we don't take the liabilities.
Sorry? There was no liability that is taken over, right?
Okay.
There was only one trade payables which we paid by ourselves. There were only assets taken over. Yes? Are you with me?
Yes, miss.
Okay, miss.
Advise Alice whether or not she should set up a new business. So there is this cash that she's received and she's considering to set up a new business of trading in wood on her own. What will happen if she sets up a new business? Alice and Bob were engaged in trading wood only. And now Alice has received some cash and now she's thinking to set up her own separate business. Advice. Come on. We can say that she has the experience and knowledge to trade in wood. Yeah.
Does not
Yes.
have to be.
She has time to run her own business. Because now she's just a shareholder of X Limited.
Yes, of course.
Only 2 marks for, okay? 2 marks again. Against. However, if she's setting up her new business, she will be in competition with X Limited. She will have the startup cost to set up the business. And what is the cash that she is receiving? 76,800. Okay, good amount of cash. So she will have the startup costs.
Yes.
Okay. So since Alice has invested her money who's also trading in gold, she should not do competition with that, ethically speaking. And otherwise, if she thinks she can manage the business separately, she should go ahead. You have 1 mark for advice, any advice you can write. Okay.
Yes, miss.
So with this, we complete this very difficult sum of May, June 23, paper 13. It is actually not difficult. It is a type of a sum which you once know, then you can do all sums of the same time. Okay.
Okay, miss.
Thank
Okay,
you.
miss.